So today is day 3, and I will be teaching you guys about chart patterns. So chart patterns are something that I use and are unique to the stock market that I really like, right? So basically, they allow you to profit big moves, especially with swings, but you can also use them for day trades as well, right? So in technical analysis, transitions between rising and falling trends are often signaled by price patterns. By definition, a price pattern is a recognizable confirmation of price movements that is identified using a series of trend lines and or curves. When a price pattern signals a change in trend direction, it is known as a reversal pattern. A continuation pattern occurs when the trend continues in its existing direction following a brief pause. Technical analysts have long used price patterns to examine current movements and forecast future market movements. So, continuation patterns. Basically, I'm going to kind of do this because you guys don't really need to read this whole paragraph to kind of see what a continuation pattern is, right? But basically, a continuation pattern is when there is a trend and it follows the trend after the pause. Let me make sure you guys can hear and see me real quick. Can you guys hear me and see my screen? Okay, cool. All right, we have confirmation. So right here is a flag pattern, right? And before you see the trend is bullish, but after a brief pause, the trend becomes even more bullish. Wish I can turn that Google Chrome thing off. They just show every Instagram thing. But anyways, so this would be a continuation pattern because the prior trend was bullish and then it continued bullish. This will be a continuation pattern. What else? This one too. Even this one. So a reversal pattern is the quite opposite, right? So whenever the prior trend is reversed, so this would be a reversal pattern, right? Because the prior trend was bullish and then it turned bearish, right? And this one too, prior trend was bullish, then it turned bearish and vice versa, right? So those are the definitions of reversal and continuation patterns, right? So do you guys understand that? You just I just need some yeses. Okay, cool, cool, cool. So chart pattern list. These are this is just scratching the surface, but I'm going to be honest with you guys. And I've been, I have experience with these, right? So if I was to mark the ones that you're actually going to use, like and truthfully see, and that I've seen, if I was to mark them, it would definitely be this one. Definitely be that one. Definitely this one. Definitely this one. This one is very popular. This one, oh, and falling wedge, right? Falling wedge. And this falling wedge too. These are very popular. So a falling wedge can come downward or it can come as a continuation pattern as well. Which one else is my favorite? I would say those. This one is not that much. Yep, I would say these are my favorites. Now, granted, these two down here, right? These two down here, that was an ugly one. I can just put a little check mark right there. So these two down here definitely are, I guess you can say they're useful, but I don't really see them happening often, honestly. But yeah, the ones I circle would be my favorite, right? I wish my wife would never turn on those notifications for Google Chrome. Wish I can get it off. I'll figure that out after AMU. Let's see. Let me take all the drawings off. Cool. All right, next slide. So as Mike went over last class, he went over support and resistance. And like you guys remember, resistance is your ceiling and support is your floor, right? So always remember that resistance is your ceiling and support is your floor. So these are my current favorite chart patterns, correct? So this is a symmetrical triangle. This is a falling wedge, cup and handle, pennant, bull flag, right? So these, if you can screenshot this, write this down, but these are my favorites right here. So they didn't show the cup and handle on the last slide, but I will go over it. But this one you'll make the most money on. I swear, this one is like automatic. Falling wedge. Well, actually, falling wedge is the biggest one. That's going to make you the most money out of all of these, in my opinion. But yeah, and I'll explain why in a minute. So this is called a symmetrical triangle, right? And what makes it a symmetrical triangle, right? So when I'm going over these price patterns, I'm talking about the daily chart because this is what they use it on, right? So you can use this on a 5-minute chart, any other chart, right? But I personally like to use them on the daily chart because I like to swing, it just, like I said, the daily chart is what's up, right? So 2 to 3 touches of support and resistance, duration of at least 2 to 3 months. So 1 touch, 2 touch, 3 touch of support and resistance, right? Check. Duration of at least 2 to 3 months, December, January, February, check. Now, how do you create the targets of where it's projected to go? You take the longest line, right? So this would be the longest line, and then you apply it to the breakout. So all I did was copy and paste this line and then apply it here. So let's try that, right? And don't worry about if it's scaled correctly. Yes, it is, right? So this line, oops, let me, and then let me get my mouse. If it'll let me move this thing. All right, I have no idea how to move that thing. It used to be a way I could move it. Let me try one more time. But anyways, you guys get the picture. Basically, I copied and pasted this line and applied it there. Let me try one more time though. All right, so boom. All right, let me try to get out my mouse. Yeah, I have no idea why. I swear it's like every time we do an AMU class, Zoom makes something unusable. It's like they take away a privilege every class. I don't know. It's weird with them. So where are we now? Why did it skip? Okay. Yep, symmetrical triangle. All right. So pennant. So the difference between the symmetrical triangle and the pennant is the duration of 1 to 4 weeks rather than the symmetrical triangle. Come on now. Stop acting up, Zoom. So the symmetrical triangle is 2 to 3 months, and this one is 1 to 4 weeks, right? So it has 2 to 3 touches of support resistance, right? And then a duration of at least 1 to 4 weeks. So as you can see, it lasted from December to January. And then bullish volume on the breakout, right? So boom, bullish volume on the breakout right here, bullish volume. And then all I did was copy and paste this line and apply it to the breakout. And I wish they would let me do that. Let me try one more time, Zoom. Don't fail me. All right. Okay, this might be it. Boom, there we go. All right. So let me go back and show that. Let me go back and show that. So let me undo. undo, right? So I want to kind of go back to the symmetrical triangle and show that one more time, right? So I will literally apply this breakout, this line right here, and then I will literally copy and paste it to the breakout. And as you can see, boom, it hit right on the money. And I'm going to keep doing this with each one. And you're going to see that it keeps working. Oops. All right. So this is the most powerful one. And what I've learned, and it's kind of common sense, what you're going to learn is the most powerful ones are typically the ones that require the longest time to make. So the reason why the falling wedge is more powerful or more powerful breakout than the others is because it takes 3 to 6 months to form. So in a way, I guess you can say it worked hard for it. If it took that long for something to form, then that was hard work, right? So 2 to 3 touches of support and resistance, breakout with volume, right? So boom, 1, 2, 3 touches of support resistance, perfect. And these touches were so perfect, it's ridiculous. Bam, bam, bam. So one thing I can say about SQ is, and I've been playing SQ for a long time, as you can see, like this is graphs that I've charted back in 2019, right? SQ has probably gave me the most examples to use in books, courses, or whatnot, because it follows technical analysis to the T. That's one thing I can say about SQ. And you're going to see, I believe, next class. Watch how we're going to have another example next class of how SQ did some powerful stuff, right? It just keeps happening. So that's pretty much what a falling wedge is a nice big old pattern. And yep, I got examples. So I had to show you guys my findings over the last, couple of years, right? So we're looking at Illumina, right? This is a falling wedge. So we have 1, 2, 3 touches of support, 1, 2, 3 touches of resistance. The duration lasting what? 3 months. And then look at that. So what was this? Boom. Yep, volume on the breakout. And then it just went crazy, right? So if we do the so this one actually exceeded the expectations of where it's supposed to go, right? So it was supposed to go, if we do like the longest line right here, select, boom. All right. So that was its first projected target. As you can see, it got rejected right there as soon as it hit the target. But man, oh man, it came back with vengeance with this day right here. So usually I would say hold a falling wedge for the first week just to see how it goes. And you're going to see, like I always told people, if I find another one of these patterns, I'm throwing the house at it. I'm talking about, they're so hard to find. So, man, I mean, these guys are just crazy, right? So this one is ACB Aurora Cannabis, right? Marijuana company. 1, 2, 3 touches of resistance. 1, 2, 3 touches of support. And then some nice volume on the breakout. And let's see if it hit our target, right? So let's see if it hit our target. So this is stuff you can go check after me, right? You don't have to take my word for it. You can go to ACB 2019 and go find this pattern for yourself, right? And same with this last one. You can go to Illumina, because this is a real chart, 2019 June, and go look at this yourself and do the same thing I just did. So I'm going to draw the target here. So let's just see if it hit our target. So you can literally take the longest line right? So that's the longest line. So it's usually this first big old line, right? And let's see if it hit our target. And it looked like it did. So I'm going to apply this thing to the breakout and stand it straight up, right? Boom. Hit our target, right? And look, it start rejecting at the target point. That's how you know it's a good target, because boom, and then it starts rejecting right here. Does everyone see what I'm doing right here? Put a yes. All right. So how would you play this? You would play this. So remember, I'm following the daily chart, right? Let's see if I can get out of this thing. So remember, I'm looking at the daily chart. So how would I swing this, right? Let's see how long it's taking. So remember, it took 3 to 6 months to form, but it start reaching its price targets in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. All right, it took 20 days for it to reach this target point. Not a lot of people would dare to hold this thing for 20 days, right? Just not a lot of people who have the balls to hold this for 20 days. So I'm going to give you guys a perspective on what it takes and the patience it takes to make money, right? So right here, it took, let me clear the screen real quick. Right here, it took 1, 2, 3, 4, 5, 6, 7, 8. Okay, this one took about 8 to 9 days to form, right? So this one took about 8 to 9 days. And this one took about, I guess you can say 19 here, and then like another maybe 40 days, right? So things don't happen overnight. It took it 3 to 6 months to come down, and it took about a month for it to reach its target, right? So these moves aren't happening overnight, but I guarantee even these first 3 days you would have made, because actually I remember this, I made 500%. I took profits on the third day. I'll never forget, because I was like, man, that's 3 big old days that I just made. Like I literally got in about right here and then got out about right here. But then as time went by and I realized, like, damn, this shit hit the perfect target, like the book said. So I go back and do hella research, right? And I'm like, okay, cool. This is insane. Like, this pattern is insane. It hits the target every time with a parabolic breakout. So I'm like, all I need to do is catch one in life and I'm rich. But yeah, like, that's if you can catch one of these, you're honestly going to be printing. But does everyone understand where I'm going with this, with the falling wedge? Yeah, it's a crazy pattern. It's the most powerful pattern. So here's a bull flag. And the bull flag is going to be a common pattern that you see on the 5-minute chart, the daily chart, 15-minute. It's going to be on every time frame, a very, very popular pattern. And it's iconic for the way it looks. So 2 to 3 touches of support resistance, flag formation 1 to 4 weeks, duration of at least a month, right? So it doesn't really last that long. Now, this is on a daily chart. Now, you can use this on any chart, right? So how do we find the target? Again, this one is kind of simple. So you're going to literally, the flagpole is your target. So boom, and then literally copy and paste to the breakout, and then boom, what does it start doing? Rejecting at the breakout. So that's how you know these targets are for real. After it reaches its target, it's just done, right? And recently, Costco did that. Let me take this off, clear all drawings. And then what do we have here, right? JD.com. So if we're trying to do our target, of course, it's probably going to hit, right? So we can even say this could be a flagpole and this could too, from right here to right here. So I could say boom, right? JD actually hit this target. So it got a lot more to go, but as you can see, it looks like it's getting there, right? I'm pretty sure if we go back and check the data, it reached eventually, right? So that is how powerful patterns like this are. You know, they just form and then you can pretty much see where they're going. All right, here's Tesla. And by the way, this is the bottom. This is the last time Tesla was this low. So definitely pay homage to this that you're seeing, because Tesla was this low a long time ago. It's not been the same since. So this bull flag you're seeing right here is very iconic. In fact, Tesla just bull flag like a week ago or so. And I was about to call it on my watch list actually on my birthday. And I was in St. Lucia and the internet didn't work. So I couldn't do a Sunday's watch list, but everything on my Sunday watch list took off and Tesla actually bull flag. So as you can see, once again, I applied from right here to right here. And then what did it do? Reach the target again. Tesla is no joke. Just when you think it's over right here for this little big old green candle, boom. I mean, this is like the stock that keeps giving. It made a lot of people rich, you know, but still, you see that these patterns work. This isn't just bluff. You see what I'm saying? So boom, cup and handle formation, as you can see. And what does it say? Cup form 1 to 3 months. So boom, 1, 2, 3. So the cup is about 2 months old-ish, right? Cup is 2 months old. Volume during breakout. Duration of handle 1 to 2 weeks. So as you can see, duration of the handle isn't going to be that long. And then you need volume on the breakout. And then what does this thing do? It reaches the target. So how do you find your target? From the bottom to the top of the cup. That's how you find your target. Now, granted, this thing usually exceeds expectations all the time. The cup and handle. Sorry, I had to sneeze. So look, we apply it to the breakout and then boom, right? Took off. And maybe someone can apply it to this breakout. Same thing. Took off, right? Let me see something real quick. Let me delete the drawings. All right. All right, rising wedge. I meant to say rising. Rising wedge, same thing. I take this line, apply it to the breakout. It's honestly the opposite of a falling wedge, just a rising wedge. Same thing. Works the same way. Target's going to be the same, right? So I'm going to pass this off the mic. I hope you guys learned a lot about chart patterns, and I hope you guys study this and will apply this to the future. All right.
All right, what's going on, guys? Welcome to AMU University Day 3. Before I get started today, just want to make sure everyone can see my screen. Everyone can hear me well. You can see my mouse, all the 9 yards. Perfect. So today I'm going to be talking about volume and linear regression. So these are two very important concepts. So make sure you're taking notes, make sure you're taking pictures, whatever, of my PowerPoints. Let's go ahead and get started with day 3. So understanding volume. Volume is the amount of shares traded within a specific period of time at any given time. Volume can be broken down from days all the way into a 1-minute period of time, right? So you can calculate the amount of volume in a 1-minute candle, or you can calculate the amount of volume in a 1-week candle, okay? Volume is a very important indication of price action and demand. Higher volume equals higher demand, whether it's to the buying or the selling side. It is important to trade stocks and options that are backed by high volume to confirm the true direction and demand behind a stock's move. Volume on breakouts of key supports or resistances are important to confirm that the move is real and backed by buyers or sellers so you don't get faked out. Finding volume isn't always easy, but if you trade using the 5-minute chart, you can get a good idea of volume based on the indicator at the bottom of your screen. A proper stock scanner will allow you to find small cap stocks that have higher than average volume. And I'll be talking about this. I use Black Box Stocks, okay? It's a website and it shows you all the small cap stocks, the highest volume, which ones are moving, all right? But I'll be talking about that later in the course. Generally speaking, you should never trade a stock or option that has relatively low volume to its average or to the market as a whole. So when we're talking about option contracts themselves, I personally don't like to trade option contracts unless they have over 500 or 1,000 volume on the day. So when you're actually going in and you're looking at the option contract, you want to make sure that there has been buying or selling on the contract itself. You want to make sure that it's liquid, okay? So when we say liquid, that means that there is action within the actual stock and there's action within the option. There's actually people going in and buying and selling that specific contract or buying and selling that specific stock, right? So volume just shows that there is actually demand going on within the stock or option. You need to make sure that there's high volume before you enter a trade. So these are the rules of volume. Volume is demand, right? High volume represents that there's high demand to the direction of a stock, okay? So if you have high volume and it's going to the upside, that means it's a strong, healthy uptrend. If you have high volume and it's going to the downside, that means it's a strong, healthy downtrend, all right? It shows the demand of where the stock wants to go. So if there is no volume, either on the option contracts themselves or on the individual stock or on the market, right? So if you see like SPY or QQQ, which are your main ETFs, if you see that they're dry, they're not, they're ranging, they're not moving in one direction, there's not a lot of volume, then you cannot take a trade, right? So if there's no volume on the option contract, you see that there's only been 10 contracts traded on a day, then you can't get into a trade, okay? So you have to make sure before you enter every single day trade, especially, that there is volume on the option contract and that there's volume on the stock, okay? Be willing to change your plan, okay? So, it's fine to make watch lists, which we talk about, right? We'll be talking about how we come up with our watch list. Maybe you have a key level, like you have a key support or resistance level, and you see that level pre-market. If you have a beautiful level for NVIDIA on the daily chart ready to trade, but no volume comes in, look for another stock to trade, all right? So this happens a lot. I see this quite a bit, actually. I have a nice watch list. Oh, maybe there's a beautiful level on Tesla, but the market actually opens at 9:30 a.m. and Tesla just has no volume, right? It's just, there's no aggressive buying, there's no aggressive selling. So I have to change my plan. So that's something you have to consider. Be willing to change your plan. If no volume comes in on the stock, no volume comes in on the options, look to trade something else or don't trade at all. Here are the rules of volume. So these are 4 rules of volume. Rising volume on rising stock price, right? So the volume is going up and the stock price is also going up. That represents a healthy uptrend. Falling volume, so volume is going down, but stock price is going up, that is an unhealthy uptrend and could reverse. So think about that. If the volume is going down, that means there's less buyers coming into the stock, but the stock price is still going up. If you see that, then that probably means that the stock is going to reverse, just because you want to see rising volume on rising stock price. You want to see more, you want to see aggressive buying, you want to see more buyers coming in, okay? Rising volume on falling stock price is healthy downtrend. So think about it again, it represents demand. If the volume is going up, but the stock is going down, that's good, right? You want it to agree with the direction. So if you have high volume, you want to make sure that it agrees with the downtrend, and that represents that healthy downtrend. If the volume is going down, so falling volume on falling stock price, then that is an unhealthy downtrend and it could reverse. That means there's not a lot of demand to the downside. If the volume is going down, but the stock price is also falling, then that just represents there's not a lot of sellers, there's no aggressive selling pressure, and there's no high volume. So that's an unhealthy downtrend and it could reverse. You also want to see high volume on breakouts. So if you have a key support or resistance level, whether it's on the hourly, on the 5-minute, you want to make sure on the breakout it's backed by high volume. You also want to make sure, I said this, that there's high volume on the option contracts. So if you're looking to trade NVIDIA tomorrow, or Roku tomorrow, and you have a key level or whatever, you're considering a dip buy, you want to make sure the option contracts before you enter into the trade have volume on them. You want to make sure they have at least like 500 to 1,000 contracts traded on the daily. And we'll be talking about how to actually look at that information, how to find the volume, if you're using Thinkorswim or whatever. We'll actually show you guys how to find that information on the contracts. But that's what you need to make sure before you consider an entry. So volume is a variable that is constantly changing. You have to monitor multiple stocks on your watch list in order to determine which stocks have the highest volume, clearest trend, and most aggressive buying or selling pressure. So remember this from day one. I said I'm going to mention this like 15 times throughout the course. Always, always, always when you're, one sec. When you're thinking about taking on a trade, you want to make sure that you're trading the stock with A, highest volume, B, clearest trend, and C, most aggressive buying or selling pressure, okay? So let me show you an example from just a couple of days. Well, I think this was actually last month. So from last month as to how you can determine which stock to trade based on volume and the other factors I mentioned. This is literally how I trade every single day. So look at these. I want you to look. This is just one of my monitors. I have 2 monitors for charts, and then I have another monitor for actually execution. But this is one of my monitors. I watch 8 on one monitor and then 8 on the other monitor. But if you're taking a look at each one of these individual charts, I want you to tell me of all these stocks on these, of all these 8 different stocks on this one screen, which stock has those 3 factors that I mentioned. Which stock has the highest volume, clearest trend, and most aggressive buying or selling pressure? You guys tell me in the chat. Exactly. 100%. You guys all got it right. So there you go. If you chose Roku, you 100% got it right. So if you're looking at all 8 of these stocks, you can very clearly see. By the way, volume is this indicator at the bottom. I think everyone knows that, but volume is these colored bars down at the bottom of each one of these charts, okay? So if you're looking at the volume and you're looking at Roku, you're looking at the chart, you can see Roku has the highest volume. I mean, you're just comparing it to the other stocks, right? You're just comparing it and you're seeing, yes, Roku has way more volume. Roku definitely has a clear uptrend, right? All these other stocks are pretty much trading sideways. Tesla has some volume, but there's not really a trend. It's a little downtrend, but nothing aggressive. And you can see Roku also just has the most aggressive buying pressure. Almost every single one of these candles is green, okay? So this is how I trade every single day. I'm watching my 16 different charts and I'm determining which stock has those 3 factors, which stock has the highest volume, which stock has the clearest trend, and which stock has the most aggressive buying or selling pressure. And then I plan my entry. So this is a chart just to show you guys what I was talking about on my rules of volume. Remember what I said. You want to see if the stock price is going up. You also want to see the volume going up because that represents the demand, okay? So you can see when Tesla broke out, when Tesla broke out of the pre-market highs, right? And it was finally starting to create its uptrend, the volume was also increasing, right? So the volume increased this entire way. Eventually, right, the volume is going to drop back off because you're going to get a lot of aggressive buying, but then the stock has to pull back, okay? So even on healthy uptrends, you want to make sure that the stock is pulling back, okay? But it's on the initial breakout and the initial start of the trend where you want to see the increase in volume. So you see the increase in volume and it agrees with the increase of the stock price. So I just wanted to show you guys an example of what that looks like. Increased stock price, increased volume, okay? Zoom, this picture I liked because it shows you relative volume. So this is also something that I like to use a lot. And it's just looking at day one compared to day two. So if you're considering taking on a trade, let's say you're watching your monitors, you have eight charts on one monitor, 8 charts on another monitor, or even if you just have a laptop and you're watching 4 different charts, well, you like to you like to compare day one volume compared to day two volume. So if you're looking at previous day, you can just tell the difference between a low volume day and a high volume day. So Zoom in this example on day one had pretty low volume, and that means that there's not going to be a pretty solid trend. So if there's not a lot of volume on the day, there's no aggressive buying or selling, which you can see here at the bottom, just the candlesticks are lower. Okay, there's no clear trend, then that's also going to agree with the chart. The chart was pretty sideways that day, had a little sell-off in the morning, but was pretty sideways. Compared to day two, where it opened with almost twice the amount of volume as day one, and then just had spikes in volume throughout the entire day. So even around lunchtime, around noon, just had random pretty big peaks in volume. And that's where you're going to see these clear uptrends or downtrends where you get more relative volume than the previous days. All right. It's just a cool little example. So these are just a bunch of different examples, but I think you guys are getting the point. So volume example, right? Strong trends backed by high volume. Again, when you see a stock break out of its pre-market highs, when you see a stock starting to create an uptrend or a downtrend, you want to make sure that it's backed by high volume. So you can see in this candle, just this candle alone right here actually has almost the same amount of volume as the opening candle. So something you guys, probably a lot of you guys know, but the opening candle almost always has the highest amount of volume for the entire day. So if you see a random spike in the middle of the day have pretty much the same amount of volume as the opening candle, then that is going to represent that there's a lot of aggressive buying, all right? So you can see the stock broke out and had high volume on the breakout of the pre-market high and started creating a trend. So you want to see that increase in volume backed by the increase in stock price. Same thing here, right? You get a strong open. So strong trend backed by high volume and resistance breaks. So you're going to see stocks form intraday resistances as it creates an uptrend, right? You're going to see those pullbacks, but you just want to make sure that there is an increase of volume with the increase of the stock price. So you can see here, this is Boeing, right? 5-minute chart. Boeing had an increase in volume. You can see from the open for like 30 minutes into the open, actually had an increase of volume. And that's why we had a strong, healthy uptrend, because we had increase in stock price backed by increase in volume. So that represents a strong, healthy uptrend. All right. These are just examples. So there you go. We had an intraday resistance form here on Roku, and this is Roku 5-minute chart at 135. So after the open, it came up, rejected that 135, and actually made a double top, you can see. So it tried to hit that 135 again about 30, 45 minutes later and rejected twice off of that 135. So maybe you're thinking to take this as a trade if it can break that 135 later in the day. So what you're looking for, excuse me, you guys, sorry, is an increase in volume on the breakout, but just a relative increase in volume. So what does that mean? When it breaks, when you see an intraday resistance form like this, and you're considering taking the breakout, right, to buy calls, you want to see an increase in relative volume. And relative volume means that you're scanning, you're looking back at the previous volume candles over the past hour or two, okay? And all you want to see is that, yes, there was an increase in volume. If there was not an increase in volume, then maybe you don't take the breakout or you take it very light. All right. And then same thing, it created another little intraday resistance at 136. It's just a whole number, okay? So you're going to see a lot of support and resistances form at those whole numbers. So another little intraday resistance at 136. And again, it was backed by some volume, not crazy high volume, but you did see a little increase in volume as the stock broke out. All right. And it's just, again, comparing that relative volume. You're looking at the average size of the candles over the past hour or two, and you're determining that there was there was some sort of demand for upside just based on the fact that there was higher volume than the previous hour or two. All right. So you're looking at relative volume. You don't really need to calculate anything. It's more looking at the relative volume and actually watching the chart itself. And are you seeing that increase in demand when it breaks the key level? Another little key resistance break. So again, in this example, I just wanted to show that you're not always going to see crazy high spikes in volume. So that's why I said you have to look at relative volume, right? You're actually just looking at the previous candles over the past 1 to 2 hours, and you're comparing the breakout candle, right, the breakout volume to the past hour or two, okay? And in this example, these candles aren't that much higher, right? They're not that much bigger than the previous candles, but they are relatively bigger, okay? But this isn't a ton of volume. So if you see this on a breakout, maybe take it a little bit lighter, right? If you don't see a lot of demand come in, just maybe take that position a little bit lighter. Now this is when you really want to put on some size. So if you see volume spikes huge like this also, and it's agreeing with the chart itself, then this is when you want to take on some size. So you can see the opening candle is right here. An intraday candle is twice the size as the opening candle. So there was twice as much volume. It's twice as much volume on this intraday candle than there was on the actual opening candle. So if you see that and it's agreeing with it in the chart, you can see this nasty downside, right? Then that is when you're going to want to take this stock short. You're going to want to buy puts because that shows seller demand, right? That shows aggressive selling, and it's agreeing with it on the chart. Remember what I said, falling stock price with rising volume, right? Falling stock price, rising volume is healthy downtrend. All right. Now let's talk about trading using linear regression. So linear regression is the relationship between two variables by fitting a linear equation or trend to observe data points. In the case of trading, the two variables are price and time. All right. Put simply into a chart, linear regression shows the median of the two variables by plotting a straight line average. The red line represents the averages between the variables, while the blue dots are the different data points or deviation. So I don't know how many of you guys have taken statistics in college, but you probably heard about linear regression. but you can also use linear regression in trading. So how can you trade using linear regression? As a trader, one sec. As a trader, you can use linear regression to find when a stock is overbought or oversold, okay? You want to short at the top of regression and buy at the bottom of regression. In order for this method to work, there must be a clear trend. So you're going to hear us a lot with the strategies that we used in AMU. Always, 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 we're looking for a clear trend. That is how trades are developed. If a stock is moving sideways, there is no trade, all right? So always look for a trend. A standard deviation one side of the average is 34% of the data, or 68% of the data points if you use one positive and one negative standard deviation. Now, this is just for you to know. You don't actually need to understand this, though, okay? To understand how to trade linear regression, it's just for you to know. The regression trend will eventually break to the upside or downside, so it doesn't work every time. You have to have a planned stop loss when you get into trading using linear regression. But this is how you actually trade using linear regression. So the first thing you're going to want to do is, well, I like to use personally the 15-minute or the 1-hour chart, because that gives you a few days of data. So, and Boeing, I found this downtrend, right? You know, you guys, I think you guys, most of you guys know this, but the white is intraday, yellow is pre-market and after hours, okay? So white is day 1, day 2, day 3, day 4. So I noticed a 4-day downtrend in Boeing. So this is a 4-day downtrend, and I drew my linear regression. So on the bottom of my linear regression, you're going to see a lower deviation line. On the top of linear regression is called the upper deviation line. And then in the middle is the median line. So that's the average, right? So anyway, I drew this linear regression by starting at the top of where the trend started to the bottom of where the trend ends. So this is a 4-day downtrend, right? How you actually trade using linear regression is very simple. When the stock approaches the lower deviation line in a downtrend, you're going to buy, right? You're going to buy or long or buy calls, and then you start selling as the stock moves toward the median line, or you can wait until the upper deviation line, but you should start selling, right? So you're longing at the bottom and then shorting or buying puts at the top, right? And that's how linear regression works. Here's another example, right? So you're drawing when a stock creates a trend, you're drawing your linear regression, you're buying at the bottom, shorting at the top, buying at the bottom, shorting at the top, buying at the bottom, shorting at the top. Now, eventually the stock will break. You can see over here. So the stock broke through, it broke the uptrend. And that's why you have to have a specified stop loss below and above each break. Right? But I just want to show you real examples. This is actually like how you can trade live, okay? So I posted this, when was this? October 15th. I used linear regression to figure out this bounce. So I don't know how many of you guys are in the chat or not, but I post a lot of bounces. I post a lot of bounces, and they're pretty accurate, all right? So I said I was watching BA for a bounce at 158.8. How did I determine that? So I noticed BA had nice downtrend form over past 3 days. There you go. Day 1, day 2, day 3. This is a downtrend. I noticed it had a downtrend form within the 3-day period. So I drew my linear regression trend. This is my linear regression. This is a 15-minute chart, right? I then zoomed out and noticed BA also had a nice support, right? This is now the 1-hour chart. And I noticed it had a nice support at 159.20. I chose the 150, sorry. I chose the 158.80 level for the bounce as that is the lower of the two between regression and that key support. Right, so I'd rather get in at a lower level than a higher level and have to average down, okay? So I saw the support at 159.20 and the linear regression, right? The bottom of this linear regression was at 158.80, you can see right here. And I chose 158.80 as the bounce. I showed you where I posted on Discord, right? I said 158.80. So what happened? What happened when the stock reached the 158.80? There you go. So this is how I determine a lot of my bounces. I'm using linear regression and I'm using support and resistance. And if you can get if you can get a combination of the two of them, like I just showed you, so if you can get a key support and the bottom of a linear regression, then it's a really, really high probability bounce. So this was day 4, right? I chose that bounce before it even happened, and you can see where it bounced. It bounced right at 158.8 all the way up to the 164s. So that's how you can use linear regression and support and resistance combined. Here's another example. I posted this July 8th at 11:28 a.m. for a bounce on SPY. So I drew this linear regression myself. I just saw it coming, and I didn't have time to actually go in and draw it and use the actual indicator. But I just drew this myself quickly. I mean, it's essentially just a channel, right? So I noticed this channel on SPY, and I said a bounce was incoming. SPY was at 313 when I posted that. And there you go. So it went from 313, hit that lower deviation, right? Hit the lower side, lower regression, and then bounced straight off of it. Same thing, this was a day later. I was just using that same regression line that I just talked about. I was using the same one from July 8th. So I said if this 15-minute candle closed as a bullish pen bar, you guys learned about that, off of lower regression, I'm longing. What happened? Bam, hit that lower deviation again and bounced off of it like $4. All right. Now you can see it did wick below it. So how you determine stop loss? You use the closest psychological whole number. So in this example, right, the lower deviation was around 311.30, 311.50. So if you're using the closest excuse me. If you're using the closest psychological whole number, then it would be 310. So if it would have broken 310, then that would be your stop loss on that trade, all right? But that is how you trade linear regression, all right? And I also am going to show you guys how to set it up on TradingView, but I'm going to let Unraveler go first so I can drink some water, and then I'll show you guys after he finishes. All right. But anyway, I hope volume and linear regression made sense. I will be passing it off to Unraveler now. Thanks.
Thanks, Mike. Good evening, everyone. Welcome to day 3 of AMU University. So today is topics about momentum and price action. Can everyone see my screen? Hear me just fine and also see my laser pointer? All right. See a lot of yeses. All right, perfect. So today we have a very, very interesting lesson, and I would say that this is my most favorite lesson in AMU. Wait, some people can't see the screen. All right, same routine. If you guys can't see my screen, just log off and sign back in because it's just a Zoom issue. Some people just can't see it. Okay. All right, so today is one of my favorite lessons in AMU. We're going to talk about momentum and price action. And just like our last class, today's class, the intent is to teach you how to read momentum in stock charts. And it's going to change the way you look at stock charts. It's going to change the way you trade, especially if you want to be a good day trader. You want to know how to read momentum properly. All right, so let's get started. Let's see what we're going to learn today. First, I'm going to talk about momentum. So I'm going to explain what is momentum and how you can relate that in trading. And then when should you be using momentum strategy? Then how to identify stocks with strong momentum. Then the next two slides are the most important slides in today's lesson. That is characteristics of strong momentum price action and then characteristics of weak momentum price action. So we're going to know so these two slides will let you know, I will teach you what it is that you need to be looking for in a stock chart to identify strong and weak momentum. And then volume and price action, rules to follow in momentum trading. Lastly, we'll be going over a lot of examples. Okay, let's get started. So what is momentum? In physics, momentum is defined as the product of mass and velocity. By this definition, you can say that momentum increases when mass or velocity increases. Well, this may be confusing and you may be wondering, why is this guy talking about physics? We're here to learn trading, right? That should be the question that coming to your mind. So there is a reason, there is a method to this madness. So let's go over these examples first. So first example here, the speed of the bicycle increases in a downhill, causing momentum to rise. So, okay, again, I'm going to say, if you guys can't see the screen, just log off and log back in. You will be able to see it. It's just a Zoom issue. Okay. All right. So let's take a first example here, right? So if you're going on a downhill, right? Let's say you're riding a bike on a downhill without doing anything. Because of the downhill, your speed increases, right? The downhill causes momentum to rise, causing the speed of the bicycle to increase, right? So that's one example of momentum. Next example of momentum is, assume a snowball, right? When it's rolling down a downhill, it starts small, its mass is small. And as it goes down, it gathers more mass and its speed increases. In both these cases, you'll notice that when momentum increases, the speed or rate of change increases, right? Now, you don't have to understand this whole, but I just wanted to provide a brief introduction on some real life examples of momentum. So how do you relate momentum in trading, right? Momentum is defined as the rate of change of price of an asset with respect to time. Okay. Can everyone see this graph, right? So this graph here represents, on the y-axis, we have the stock price. Let's assume that this is the stock price. The value is the stock price. And on the x-axis is time, right? Every day, let's say 8 hours of the day. So there are three different stocks. So green stock, let's say it's Tesla, right? Green represents Tesla. And the black one here, it represents, let's say, SPY, okay? And the red one here, let's say it represents Apple, all right? So there are three different stocks here, right? So what can you tell from the get-go? When you just stare at these three stocks, what can you tell? The green stock here, it also is in an uptrend. The black stock here is also in an uptrend. The red stock here is also in an uptrend. Can anyone deny that? That it is what it is, right? It's all three of them are in uptrends. But if you compare them, green stock here moves at a lot faster pace and it gains a lot of value. So let's say this is 0. Let's say it gains $10 value in an hour, right? At the same time, this stock here, the black stock, gains $8 and it takes 2 hours. And the red stock here gains $4 and it takes 3 hours, right? So you guys can see the point here, right? When momentum increases, price changes occur faster in a period. And when momentum decreases, price changes occur slower in a period. Momentum is defined as the rate of change of price of an asset with respect to time. So in a nutshell, when we're talking about momentum trading, we're always on the lookout for stocks that move by a large price point in a short period of time, right? We don't want stocks with slow pace. We want stocks with strong, with faster pace. We wanted to make a large price point move in a shorter period of time, right? Now, do you guys understand the correlation between the momentum physics example, right? So if you're riding a bike on a flat surface, your speed is going to be uniform. But if you're going on a downhill, right, without doing anything, your speed is just going to increase. The same thing applies here as well. Momentum is going to cause price increase to faster in a short period of time, right? It's very important, and that's how we options traders, especially if you're day trading, right? You don't want to be trading something that's moving like this, like an apple, or even like a SPY. You want something that's really trending with strong momentum and volume. That's where your profit potential lies, right? You want something to trade that's moving quickly and not shopping around, right? Okay, so momentum strategy can be used to trade stocks moving with strong momentum in a trending market. This strategy is very popular among day traders and swing traders because it focuses on strong price trends and momentum. It provides great opportunity to make a large return in a short period of time. All right. Does everyone understand what momentum means? So essentially, momentum means the rate at which price changes over a short period of time. Okay. So as a day trader and as a swing trader, we're constantly on the lookout for stocks that's actually moving at a good pace and making a decent price point move. Okay. So that's strong momentum. Okay. So when should you be using momentum strategy? Now, this slide is also very important from a fundamental. You need to understand the different types of strategies before you use them, right? So when should you be using momentum strategy? So if you're going to be a momentum trader, the goal of momentum trading strategy is to buy when there is strong momentum and sell when the momentum begins to show weakness or slow down. This is my primary. I mean, all three of us, we trade momentum stocks every single day. If you're a day trader, if you want to be a scalper, you need to look for strong momentum stocks. And this should be your mantra. This should be your goal. You buy when there is strong momentum and volume, and you sell when the momentum begins to slow down or show weakness, right? It's that simple. The strategy is very, very simple, and I'll explain all the rules later. But essentially, this is going to be your strategy. Buy when there is strength, sell when there is weakness. Okay. So that said, there are two different approaches to using momentum strategy. Some traders like to enter the trade before momentum starts to pick up. So this approach allows traders to ride the MOMO, like I like to call it, momentum, from start to finish without missing any part of the move. However, traders employing the strategy must read price action very carefully, develop a sound game plan assessing both risk and reward before entering the trade. So sometimes you guys understand, right? Let's say there's a big institution, all right? So you think those big institutions and people with a large amount of money that's actually accumulating stocks, you think they're all trading breakouts and momentums? So sure, some of them are trading, but most of them, what they're going to do is they're going to accumulate positions in stocks. What that means is they're going to buy a large amount of stocks or shares in stocks that they believe that has good upside potential, right? They're looking for good risk reward trades, right? So they're going to accumulate a large volume of shares or a small position in options, whatever the case may be, and they're trying to predict they're trying to time their entry right before the momentum starts to pick up. Okay, so let's assume that there is a support area here, and the stock has been consolidating in that area for, let's say, 2 weeks. Okay, so these big traders, right, they're going to buy all the shares in this area, anticipating a reversal in the stock, right? And in a few weeks' time, the stock will reverse, and they're going to ride the momentum, the MOMO, from start to finish without missing any part of the move, and making a good risk reward trade because they're bought low and sold high. Okay, so this is a strategy that's commonly employed by a lot of equity traders. If you've seen all the big traders, like even if you follow someone on Twitter or how the funds trade, how the institutions trade, you see Cathie Wood, right? So every time she always buys when the stocks are selling. If you've noticed her trend, she never buys the highs. Whenever selling, whenever there is fear, that's when she buys, right? So that's how big guys work. That's how they accumulate shares. And that's the basis of this trading strategy. Some traders like to enter the trade before momentum starts to pick up. Okay. So like I said, this strategy is very, very rewarding, but you need to read price action very carefully and develop a sound game plan before entering. Because think about it. If you're going to trade options, you shouldn't be too early to the party, right? Because the early you are, you don't want your option contract to be chopped around when it is trading sideways. So trading and trade entry is very, very important when using the strategy. Okay. So in the next class, that is on Tuesday, I will explain how to use the strategy. I'm going to go through a particular indicator and strategy, and we'll learn how to use this strategy, how to enter stocks before momentum starts to ride in the next class. All right. So today we're going to talk about the second approach. Some traders like to wait for momentum and price action to be confirmed before entering the trade. As day traders, we post our watch list every single day. Those are the trades that we take every single day. And we only focus on momentum stocks. Once we've confirmed price action, we enter the trade, right? So the drawback of this approach is that you may miss part of the initial move, thereby reducing your profit potential. But it is a much safer strategy because you're waiting for price action to be confirmed before entering. So think about this one. Let's say, let's think about a stock. Let's say BA, right? Let's say BA is up 3% pre-market. Okay, and you've seen that BA has already traded 500,000 shares in the pre-market, and they have some good news surrounding the stock. And you think that this is going to really pop up during the opening bell, the first candle itself, right? So you know that there is good price action. There is the stock's popping up to a decent price amount pre-market. It has good volume. The momentum in the stock is good, and there is a catalyst supporting it, right? So there are like 4 check boxes, and all of them are ticked, right? So this is a stock that you can trade at the open. Okay. So now that you have that confirmed, all you have to do is wait for the opening candle and enter based on some kind of criteria. So one thing you will end up happening is you will miss the initial move because the stock is already up 3%. So part of that move you have missed, but you are waiting for the momentum to be confirmed. So imagine swinging something or holding an overnight position and that goes down, right? So you're not making a gamble like that, but instead you're waiting for price action to confirm, and then you're putting your capital at risk and entering the trade. So this approach has a con, that is you're missing part of the move, but it is definitely a much safer strategy compared to just risking your capital overnight on positions. Okay. And second point is more important. Chasing momentum plays at the end of a move due to FOMO, that is fear of missing out, can result in trading losses. So timing entries and exits very important in this strategy. I cannot stress this enough. So has this ever happened to you? So you see a stock like, let's say Tesla, right? You see a stock that's popping, and you miss the initial breakout, and then you just buy it. It's absolutely impossible, So like when people give into FOMO and chase a stock, right? They'll buy the absolute top. Like it's actually impossible to even try to do it, but you just do it. It's just a skill, right? People just buy the absolute top, and after you buy the top, everything just downs, and sometimes people add, and then they take a big loss, or they hold the bag and wait until 99 stop loss. It's a skill, right? Exactly, it's a skill, right? So if you're going to be, you guys are going to be professional traders, right? So the first thing that you need to not do is chase momentum plays, right? You should not chase momentum plays, because if it is really a strong momentum play like this, right, there will be a pullback, right? That's when you need to attack. If you're going to chase at the tip of every momentum candle, you are going to stop out and you are going to lose a lot of money. And you keep doing this enough times, you're going to blow your account, right? So chasing momentum plays at the end of a move due to FOMO can result in trading losses, huge trading losses. So timing of entry and exit is very, very important in this strategy. Remember, I don't know if you guys remember, so in the last lesson, I explained to you about trends, right? About swing highs and lows. So what did I tell you? Once you see a stock making a significant move, you don't just chase that stock. You wait for the pullback, and you time your entry there. Not only that is that very, very important, especially when you're trading options, right? When a stock is popping, when a stock is like, let's say it's green and it's at the high, right? The demand is high. So you're going to buy at peak demand, meaning the IV is high, the stock is at the highest point in that candle range. So if you buy at the top and then immediately it rejects, right, you're going to lose more than half of your value, at least half of your value, if it was a strong rejection. So you need to be absolutely careful when you're trading momentum stocks, because when your momentum is high, IV is also going to be high, which I'm going to explain in the Greeks lesson. But okay. All right. So these are the two approaches. Today, we're going to learn about how to use momentum strategy for day trading. In the next lesson, I will teach you how to use momentum strategy for swing trading. Okay. Does everyone understand the basis of momentum strategy? So what is momentum and the basis of different types of momentum strategy, and what kind of thought process you need to have when you're trading momentum? Cool. All right. You guys are really smart. Okay. So how to identify stocks with strong momentum? All right. So now we're going to come to the nitty-gritty details. All right. So when you look at a candlestick, what it is that you need to be seeing, what it is that you need to be avoiding. All right. Momentum can be identified using price action and indicators. So that is the first thing. So if you've been trading for a few months or a few years and you have no idea how to identify momentum in stocks using the candlesticks, this lesson is great for you because it will change your life. Trust me on this. Once you know how to read momentum in stocks, it will become second nature the more you practice, and you will easily be able to see when a stock is struggling to move higher, or when it is going to reject. It will become like second nature, and that's when you become a sniper trader, like sniper scalper. All right. So let's learn about that. Price action momentum. All right. So price action momentum involves reading price movements in a chart, that is reading candlesticks. All right. So you may ask me, I've been reading candlesticks for a few months now, and I have never seen momentum in a candlestick, right? That might be your question. So candlestick actually provide lots of information about price movements. It gives you the open, the high, the low, and close. So there is a term called as OHLC. That's the acronym for open, high, low, and close. And it also gives you the range for that given period. So take a look at this candlestick here. So this candlestick tells you a story, right? The stock opened here, it set a low, and then it went as high as this level here, then it closed here. This is the entire range of this candle, right? So let me see if I can get that pen here. Okay, so this candle can be represented like this: open, low, high, and close. So this is what happened in this period here, right? And the same thing you can draw for a bearish candle as well. So the stock opened here, it went as high as here. Oops, it went as low as here, and then it eventually closed here. Pardon my drawing, but you guys get the point, right? Every candlestick gives you information on what happened during that period. It gives you open, high, low, and close. And let me see if I can erase all of this. How do I erase this? Okay. All right. Laser pointer. All right. So candlestick gives you a lot of information, and candlesticks also tells you the sentiment of that period. So this is the most important thing. I always tell you, if you're a momentum trader, you need to read the sentiment, that's current sentiment of the stock. So sentiment can be read by reading candlesticks. That's one option. And number two is watching level 2 and the tape, right? So these three components is what's going to tell you what's currently happening in the stock. Are the bulls in control or are the bears in control? Candlesticks tell you who is winning the battle, the bulls or the bears, right? So these are the different things that you can learn just from candlesticks. But do candlesticks tell you anything about momentum? Yes. Remember, momentum can be thought of as the rate at which price changes over a period. Thus, momentum can be identified by comparing candlesticks. The open, high, low, and close of the current candlesticks with the previous candlestick can help you determine the rate of change of price. So let's take a look at this candle. So the candle opened here, set a low here, and then went as high as here, and then closed here. So if the next candle that opens has a bigger price range. So let's assume that this is a $5 price range, right? So if this whole range is $5, and the next candle, let's say it makes a $6 price range or a $7 price range, right? What does that tell you? So price change was initially $5 and then it became $6 and then it became $7 and then became $8. The range of the candle continues to increase, and thereby you can tell that the price is accelerating at a quicker pace, right? It's going faster, right? So the candlesticks are moving at a much faster pace, and that tells you that momentum is increasing without you doing anything. Some factor, that factor is momentum, is causing the price range movements, right? The rate at which price changes to increase at a faster rate, right? Exactly. You guys are getting it, right? So that's what's happening here. Momentum is causing this stock to accelerate at a faster rate, right? And that's how you read momentum. You compare candlesticks one to the other, compare the current candlestick with the previous candlestick, and you can see whether if price is accelerating or just staying the same way, or if it's decelerating, meaning it's contracting. Okay. And another very nice slide here is it's very important, right? So over here at this point here, so I want you guys to take a note of which candlestick you need to be looking for in a bullish and bearish chart for momentum trades, right? So candlestick number 1 is the most bullish candlestick, right? So price opened here, the bulls totally took control of this particular time period. They bought the price opened here, and the bulls bought the whole thing and pushed, and the price closed near the highs, right? So this is the ultimate bullish candle, right? So there was no room for any kind of indecisiveness. Bulls were in total control, right? And this second candle here, you guys can see price opened here, it went as high as here, and then the bears said that the bulls are getting cocky, so that they just hit them with a tennis bat and they pushed prices down, and then it closed over here, right? So bulls tried their best, but then bear said, nah, not happening, and it just dropped and it closed here. So this is a bearish candlestick, right? The sentiment is bearish, right? So it's a green candlestick, but the sentiment, right? That's what I want you guys to start learning and start seeing in candlesticks, right? The sentiment is bearish in this candlestick despite it being green, right? And the third candlestick here is an indecisive candlestick. So if you see a candlestick like this popping in the middle of an uptrend or the high near the highs, right? That just tells you that the bulls try to buy the dip, right? And the bears try to push it down. The price closed somewhere in the middle, right? So you guys can see that it could break in either direction. It could continue its momentum if bulls take control in the next time period, or if the bears take control, there could be a reversal, right? And the next candlestick here is a bullish hammer or a pin bar, however you want to call it. Price opened here, right? And bears tried to push it down, but then bulls wouldn't have that. They just tried pushing the prices back up, and it closed near the high. So this is the second most bullish candlestick. This is the first one, this is the second one, and it shows you strong bullish price action, right? So number 1 and number 4 are what you should be looking for in an uptrend, right? And a strong uptrend. These are the candles. The more candlesticks you see like this, the stronger the trend, right? And from a bearish candlestick standpoint, this is the most bearish candlestick, right? And this is the second most bearish candlestick. So you guys can see, right? So the price opened here and price closed here near the lows, and then same way price opened here, bulls tried to buy the dip, but then bears took control and price closed here, right? This is indecisive. This is a bullish sentiment candlestick again. So bears tried to push prices down, but then the bulls took control and price closed near here, right? So this is a bullish sentiment candle. This is also an indecisive candle. All right. Does everyone understand this? So this is how you need to read the sentiment of that period. Every candlestick tells its own story, and you need to train your brain to see this, right? Don't just focus on the color and the shape of the candle. You need to learn to see the sentiment, what's happening, right? Okay. All right. So the next 2 slides, very, very important. Please focus, take notes, take screenshots, whatever, because this is what's going to help you actually learn to read momentum, right? So this is what's going to help you make money and also make you stay in trades longer than you should, and also learn where to take profits. Okay. So characteristics of strong momentum price action. So these are the things when you're in a bullish trade in an uptrend. These are the things that you should be seeing in a stock chart. So these are the positive checkbox items. Okay. If these 3 checkboxes check, you can stay in the trade, right? It's that simple. Okay. So presence of wide range candles, momentum acceleration. So take a look at this example here. So the first candle here, right? The range of this candle, let's say this is a $2 candle, okay? So there is very little momentum, okay? But as time progresses, so the next 5-minute candle that starts forming, you can see that the stock opened above the previous candle. That is one good sign. And the second thing is bulls bought the dip and the range of the candle is increasing now. So instead of a $2 range, now it's a $4 range, right? So first the stock made a $2, then it made a $4 move. The next candle, you guys can see that the stock made an $8 move, okay? So I'm just throwing the numbers out there. So let's say it made an $8 move and then it made a $16 move, right? So you guys can see the trend here, right? The presence of wide range candles. So as time progresses, the range of the candle continues to increase. And if that happens, let me tell you, the moving averages are going to be very, very strong. You can basically just long every pullback and make money, right? Every time the stock pullbacks, when momentum is like this, all you have to do is long every pullback. Until you see an indecisive candle, you can just long and you can make money. Trust me on this. You can take a look at any example. Take a look at Tesla chart. I think yesterday, towards the close, you'll see strong momentum price action. You'll see that candlestick ranges were accelerating as time progresses and it squeezed towards the close. If you see something like this, right, it's a very, very high probability because bulls are in total control. And every time someone tries to short it, right, the premiums are not going to move because you're not going to make that much money. And because this kind of price action happens mostly because the shorts are losing, right? So you want to capitalize on this. If you see something like this, that is a very, very good sign for you as a bullish trader. Okay, the same concept applies bearish as well. So if you see a stock selling off like crazy, for example, today, you guys saw that, right? It's the same kind of momentum. You saw how wide range those candles are. Whoever tried to buy those dipped when the momentum was strong like that, they just got absolutely crushed today, right? You saw the range of those candles, right? $5 range, $3 range, right? There is no way in hell that the stock, after the stock makes a big momentum drop like that, the bulls are immediately just going to take control. It just doesn't happen like that, especially when you see strong volume, right? So all you had to do today was whenever you got a pop, right, you had to short that pop because the bears were in total control. The momentum was on their side. The sentiment was on their side. And that's exactly what you need to be looking for. You should never trade counter trend that is straight opposite of the current momentum. Okay. No, like we'll look at the time frame later, John. I'll tell you what you need to be looking for, which time frame and everything. But in this particular line, right, in this principle, in this rule, you need to be looking for presence of wide range candles. Does everyone understand the first rule here? This is a very, very important rule. When you're in a strong momentum, this is something that you need to be looking for. Okay. If you look for this, if you find something like this, if you see that range is accelerating, wait for pullbacks, long the pullback. Don't complicate things. Wait for pullbacks, long pullbacks. Mike will be teaching you EMAs and everything later in I think the next class. Just wait. If you see strong momentum, long the pullbacks. Okay. You said trade opposite of the momentum, right? If you're late. No. So when momentum is strong, you trade in the direction of momentum. So momentum is strong, right? So the stock is bullish. So you trade in the direction of the trend. You don't go counter trend. If you try to short, right, you think the stock has moved up too much. And if you try to short the pullbacks, right? Long the pullbacks means whenever the stock pulls back, you buy calls, buy more, right? Buy stock. Like, okay. Sorry, I didn't realize. Okay, long means you're long, you're buying calls or buying the stock. Okay, short means you're shorting, right? You're shorting or you're selling, buying puts or everything. Okay, it's all right. It's all right. Yeah, as long as that is clear. Okay, so the second rule here is increasing thrust. So what is thrust? Distance between swing highs in an uptrend and swing lows in a downtrend. Okay, so take a look at this diagram here, right? So this is a solid uptrend. All of us know what an oops. Excuse me. All right. So this is a very solid uptrend and you guys can identify the swing highs here, right? So check out the distance between these swing highs. So let's say the distance between these two swing highs is just $1 or $2, okay? This is swing high 1 and 2. And swing high 2 and 3, right? It's a $4 range. And swing high 3 and 4, it's an $8 range, right? It is the same concept, except that you guys can clearly see that the high of each candle, right? The distance between the high of each candle continues to increase as time progresses. That is also another good sign and a very, very important sign for you to always keep an eye on. So when you see, in our last class, I told you that as long as the stock keeps forming new swing highs is a good sign, right? That is rule number one. But there is also another important rule. You want to make sure that the distance between the swing highs is also healthy, and in bullish scenarios, you want the distance between the swing highs continue to increase as time progresses. Okay, this is a bullish sign. Does everyone understand this? Yeah, Kevin, you can increase your position if you know what you're doing. You can definitely long and increase a big position size as trend progresses. But this sign here is basically telling you that don't exit your position because momentum is still strong, right? If let's say this is a breakout that you bought BA 200 and you long the stock here, you see that momentum is continuing to increase, right? You don't have to exit your position. You can definitely leave a few runners even if you like the profits because momentum is increasing. So there is no real reason for you to get out of the trade unless you just really want to. Okay. So that's the second rule. You want to see increasing thrust. You want to see the distance between the swing highs continue to increase as trend progresses. All right. Yep. And then the third rule, depth of pullback, also known as retracement size, decreases as the trend progresses, right? Very important rule. So if the stock is really bullish, right, you would see a bullish move and then a retracement, also known as pullback. Every pullback will be on low volume, and the pullbacks, the bulls will be very aggressive and try to push prices, and they will try to create a new swing high. Okay, that is an uptrend, right? One important thing that you want to see, keep an eye on is the length of the pullback. As trend progresses and as momentum increases, you want to see the pullbacks sizes continue to be small, especially if you see Tesla or any major stock like Roku or SQ, those momentum names, right? When the trend is really strong, you won't really, so if this candle is $10 in length, right? The stock will probably just pull back $1 or $2, right? 20% retracement of the previous candle or 25%. You'll see strong buying pressure, and that is a good sign also. So if you're in a bullish trend and if you want a strong momentum stock, if you want to see depth of pullback size decreasing as the trend progresses. Okay. Someone asked me, at which pullback would be the good entry, the first or the second? So once you have entered a trade, right? Let's say 200 BA is the breakout, right? You see a strong momentum breakout, and that momentum candle was a $3 candle, right? So you can long the next pullback itself, right? So that is all you need to do. Once you know that momentum is strong like this, right? If you see 1, 2, 3 candles, whatever the case is, the thing is, this is something that you will learn when you gain more experience. A trade, once you know that momentum is strong and the sentiment is set, right? No entry is too late, right? So you can, as long as you see all these signs, you see momentum continuing to increase, you can continue to long the dips and scalp it. Because as a scalper, all you're trying to do is trying to long the dip, ride the momentum. It may even be a 1-minute trade, right? All you're trying to do is capitalize on that dip, buying into weakness and selling into strength, right? So this is something as scalpers, all of us do every single day, right? You can make a lot of money by just doing that. All you have to do is find the right stock with strong momentum and then apply the strategy. So Nicholas asked me, what's a scalp? So a scalp is a trade that lasts anywhere between a few seconds to a few minutes. We're in and out in a flash, right? A day trade usually lasts a little bit longer, but scalps usually last only a few minutes typically. All right. And another important point here, these concepts apply to a downtrend as well, right? So if we just flip the charts, you will see exactly what a downtrend is, and you want momentum increasing on the downside. You want the distance between the pullbacks decreasing on the downside as well. The distance between the swing lows increasing the downside as well. And over here, the depth of pullback, you want the retracement, whenever it's happening, you want that small as well. Okay. So for scalps, we don't really wait for the pullback, right? Since it's such a short period. No, not necessarily. So like I said, the first slide, what did I tell you? You should not buy anything, no matter how how strong it is or how weak it is. You should not buy. You won't find good risk reward if you buy at the high of the candle, right? So when even if it's the strongest momentum stock and you think that there is infinite upside potential, right? Always long pullbacks. That's just the number one rule of scalping midday or later on in the day, right? Especially if you want to, if it's not a breakout position, you want to scalp on pullbacks. Okay. All right. So we'll teach you exactly how to enter pullbacks in the next lesson. So we're going to go over moving averages, VWAP, and on the whole bunch in the next class. So you'll learn all about that in the next class. But that's, you always want to buy the dip when you're chasing momentum, please. Okay. All right. So second most important slide of today's lesson is characteristics of weak momentum price action. So this slide here, the strong momentum slide here, if it teaches you how to enter the trade and how to stay in a trade, this slide here is going to tell you when to exit a trade and when to take profit and run for the hills, right? This is more important than this slide, because a lot of times what traders do is they think that the stock is moving very strong. They try to buy the top and then hold on hopes, right? As a trader, you can have hope. I get it, but you can't be holding on to trades on hope without a sound game plan, right? If you see the price action is totally going against you, you need to think like a pro, right? If you see price action is moving against you, use common sense and you have to follow your trading rules and get out of the trade, right? So let's learn about weak momentum price action, because 9 times out of 10, this is what's going to help you cut your losses soon or let you take profits at the right moment in time, right? So rule number 1, presence of weak or narrow range candles, right? Momentum slows down. So let's assume that this candle was the strong candle, right? After this candle, we had another green candle. But one thing you'll notice here is that this candle was an $4 candle. Now this candle is a $3 candle. This is a $2 candle. And now we got that indecisive candle, which I just explained to you here, right? What did I tell you? As long as this is a good sign. This is not a good sign. This is an indecisive sign. This is a very good sign. This is an indecisive candle, right? What is happening? You guys can see, right? Bulls bought the dips. Sentiment is super strong, close near the highs. Bulls bought here. Sentiment is super strong, but the range is contracting. Bulls bought it. Range, they've set a price, but it starts wicking. Sellers are starting to take control. There is some, I wouldn't say even sellers are starting to take control. It's just that there is profit taking. After a big move like this, what did I explain in the last class? No matter how strong the stock is, there is going to be profit taking, right? It's just the human nature, right? So people are going to start booking profits, and that's what's going to happen. So they see that the momentum starting to slow down, and momentum is absolutely indecisive here. That just means that people are going to sell. A lot of orders, a lot of people are selling. Whoever is trying to buy is contracting, and sellers are starting to take control. So if you see something like this, that is a sign that a reversal or a pullback is going to come very soon. If you're riding the trade from here, and if you're on a very big size, position size, because it's a scalp, you absolutely need to get out of the trade, because you don't know or you won't know if this is going to result in a small pullback or a pullback, let's say a pullback to an 80 MA or a 21 MA or a VWAP or even the 50 MA. So you don't know that. And I don't want to wait and find out. If you're a day trader and if you're a scalper, you want to book profits and then think later, right? You don't, the main principle is you don't want to be right about everything. You just want to make money, right? So if you see something like this, the chart is telling you that there may be a reversal. Don't wait to find out, book your profits. All right. Does everyone understand the first rule? This is pretty straightforward, right? You guys can tell a clear story, right? Momentum acceleration, but range contracting, range is contracting, indecisive candle. I'm out of the trade. I'm not going to wait and find out what's going to happen. I want my money. All right. So that's the first principle. Second principle is decreasing thrust. Distance between the swing highs and an uptrend and lows and a downtrend is contracting. All right. So same principle over here in the first swing high levels here. The distance between this is like a $5-6 range. And then we have a $4 range between the 2 and 3. And then there is a $1 range. You can see that the stock is struggling to create new highs. As the time progresses, the stock is struggling to create new highs. Now, what is that telling you? No matter what, I remember we just went over trends. Every time the stock is creating a new swing high, that is a good sign. But you guys can see that the distance between the swing highs is contracting. That's just telling you that as soon it's going to form a double bottom and it's going to break that double bottom. And if we assume that this is a support, the stock is going to break this and it's going to moving average is going to cross over or whatever, is just going to drop, right? If you see something like this, that is also a good bad sign and you want to get out of that trade, right? Yeah, with candle reading, I assume when scalping, it's easier to tell the direction of 5 minutes over the 1 minute. 1 minute candle, I mean, just think about it rationally, guys. 1 minute is not enough for you to gauge the sentiment of that period, right? In 1 minute, very few things can happen. Probably in most stock, let's say 100,000 shares would probably be exchanged or something like that, right? So it's hard to gauge that. For 5 minute candle, you have a lot more data, you have a lot more volume. It's better to gauge the sentiment of a 5 minute or a 10 minute candle, and it will allow you to, it will prevent you from exiting trades too soon if you follow a much longer than 1 minute candle, right? I don't recommend focusing on 1 minute candle, just focus on 5 minutes. That's the day trading candle in my opinion. All right. The next one is depth of pullback, retracement size increases as trend progresses. All right. This is a very good point here. So remember, I told you that when you see pullbacks, you don't want to see a significant pullback. So if you see, let's say if it's a $10 candle, you want to see 20 or 30% pullback, or $3 or a $2 pullback. That just tells you that the trend is strong, right? But take a look at this pullback here, DP4. DP3 is here. The stock created new swing high, but the swing low formed here is at the same level as the previous swing low, right? So if I represent this as a candlestick, right? This is a green candle, this is a green candle, this is a green candle, and this is a big red candle because price opened here, or price opened here, and let's say it closed here, right? So this can be represented, it can be either this candle or this candle. Now, what did I tell you? These are reversal candles, right? If you see a big red engulfing candle followed by a green candle, right? That just tells you that the sentiment of this current the short-term uptrend is killed, right? There is no way this is just a 5 minute candle. Let's not talk about patterns and everything, right? So this is a 5 minute candle. If there is a green candle and you see a big red engulfing candle, the next candle 9 times out of 10 is going to go down, right? That is how candlestick sentiments work, right? So if you see a big red candle like that, I would take profits. And one tip I can give you when taking profits is if you see a red candle like that, following this green candle, right? What you can do is usually after a big red candle like that, price will make a small pop, a very small pop, right? During that small pop, the premiums will move a little in your favor, right? So let's say you have a call option, it's worth $100 after this red candle. Maybe after the small pop, it may be worth $110, right? So I would sell this dip here, sell the small rip here and take profit, because what's going to happen is after the small rip, it's going to come down. Okay, this is a small tip I can give you. If you overstay a welcome and if you didn't follow the rules, like if you didn't notice that the distance between the swing highs was contracting or whatnot, and if you didn't notice that momentum was slowing down and you overstayed your welcome and you saw that big red candle, you waited and you got that big red candle, don't stay longer because stock is going to go down for sure now. Just wait for a small pop, sell that pop. All right. So take profits during that time because the stock is going to go down. Now, then your re-entry opportunity may be coming. So the stock may pull back until this point here, right? And if there is another sign of strength there, if you see a strong momentum candle, a green candle like that, right? Moving averages crossover, right? So you can re-enter the trade, right? Okay. Does everyone understand the weak momentum price action, right? These two slides, keep it, I would say print it out, put it near your computer, watch it every single day, and then the more you look at your stock charts, the more you try to see these patterns, the more you're going to learn. This is going to become second nature in no time. This is what you need to be paying attention when you're reading a stock chart. Forget everything else. People try to look at all the crazy stuff. If you know how to read candlesticks, if you know what momentum is, if you know what strong momentum and weak momentum price action is, you can become a great day trader. All right, that's all you need. You need to know this, you need to know volume, you need to know level 2 times in sales, and all the indicators can add more value to your trading, right? Okay. So now that's said and done. Now that we know how to read momentum, we're going to talk about volume and price action. All right. So Mike went over volume. So volume is counted as the total number of shares traded, that is bought or sold during a trading day or specific time period, right? So volume is a good indicator of market strength and weakness and can be used to confirm the strength of a trend. So let's say in a 5-minute period, you see that the volume is 100,000, right? So what that essentially means is that 100,000 people have transacted in that period, right? Now, if the stock moved $2, that just tells you that the stock was the $2 move was supported by 100,000 volume, right? So that is something that is going to give validity to our momentum. So if you see an $8 move like this, right? But if you just see that only let's say 50,000 shares were traded, right? 50,000 shares were traded for an $8 move. That is just sus. I wouldn't put my money on that move, right? That just tells you that low volume. So a lot of people are getting faked out in this market, right? Especially midday, they think that the moving over is crashing over, they're getting in, and then the algos are just slamming it back down. Especially when you're trading Wednesday, Thursday contracts, boom, you're down immediately 20%, right? So that's why we preach all the time that no matter what you're trading, let it be an option contract, let it be a stock, you want to focus only on stocks that are having high volume, because volume represents demand. You don't want to be stuck in any position where there is no liquidity, right? You want a move that is backed by a lot of people, right? If you're getting into something and only a few people are trading it, right? That's more susceptible for reversals than that is something that is a lot of people are trading, right? So if Tesla is really bullish and let's say Elon Musk tweets that FSD for like FSDs are coming in, right? Millions of people are going to be trading it. You can't go wrong by longing something or shorting something when a lot of people are back behind that same move, right? So that's why volume is very, very important, and it is one of the major aspects of day trading, right? So when it comes to strong momentum, volume needs to be high when the price moves in the direction of the dominant trend and be low during pullbacks. So take a look at this one, right? This is a strong momentum move, right? Now, as time progresses, volume increases, right? Volume increases. So there is no divergence there is convergence between volume and price. As price increases, volume increases. That is a bullish move, right? But take a look at this. Higher volume during pullbacks, that is against trend, signals that the trend is weakening and or is susceptible for a reversal. So in the previous example, I told you, right, there are pullbacks here, right? So typically when you see pullbacks like this, you don't want to see high volume. So these are red candles, right? So this pullback is going to be a red candle. So if you see a red candle like this, backed by strong selling, right? That just tells you that a lot of people are booking profits and actually getting out of the trade. You don't want to see that happening. That just means that a lot of people are suspecting further upside potential for the stock. So you want to make sure that selling volume during the red candle is small, right? So that is something you have to keep an eye on. Higher volume during pullbacks, that is against trend, signals that the trend is weakening and are susceptible for reversal. So in this case, you guys can see the stock is pushing higher, but you guys can see that as the stock pushes higher, you can see a lot of wicking and profit taking, and volume is declining. This is a bad sign. And when this happens, this is when you slam. That's what you say. When you see a big downtrend like that happening and a small pop, you short the direction of that pop. So if you short here, the stock is going to go down. But today, it's an example for what happened today. We saw big selling, and then we saw small green candles. A lot of people got caught longing those candles, right? You shouldn't be longing those candles. You should wait for the retracement and then short that pop, right? And then you'll just ride the trend and make a lot of money, right? Okay, so I have actually created some rules for you guys. So you can just, this is like a formula for you to just keep an eye on for what you need to be looking for to interpret price action using volume. When price is up and volume is up, there is a strong uptrend. So we see bullish candles supported by strong upward moving volume, good sign. You're good, you guys are good. But if price is falling and volume is up, that is a strong downtrend. Price is falling, volume is up, strong downtrend, right? It's backed by a lot of sellers, the trend is valid. But if we see price moving up, but volume down, that is a weak uptrend. It shows signs of weakness and signs of reversal. This one. See stock moving up, volume is dying out, it's going to fall no matter what, right? Same thing, price is falling, volume is falling, So weak downtrend shows signs of reversal. So whenever you see periods of consolidation near support areas and you see volume dying down, right? So this happens a lot of time. Even today it happened, right? I was actually trading Netflix. I saw that near the support area, volume was dying down. So I just took profits. And 2 minutes later, I saw that big green candle, right? So when you see price is falling and volume is also falling, that just shows you that this stock is susceptible for a reversal and it's going to reverse soon. So basics, Jacob asked me. So basically, volume will dictate whether the trend is strong or weak, regardless of direction. Of course, volume is very, very important. So that just tells you the level of interest in that position, guys. So think about like that. Volume indicates demand, and if you see a stock falling and volume continues to increase, that just tells you that a lot of people are continuing to sell, and the trend is progressing in a rapid way. But at some point, if you see the stock coming to a standstill, right, and volume starting to slow down, right, that is a sign for reversal. If you're a scalper, you need to have a knack for spotting these things, right? Especially when you see a big selling happening and you see two indecisive candles, volume dying down, this thing is going to pop, right? So those are signs for you to always keep an eye on. When volume is high, you don't see price static. Price doesn't stay in one place, right, for a long period of time. It constantly keeps moving. Momentum means movement, right? If you see two standstill, like static candles, like going nowhere, right, then you see volume drying up, that's going to pop. That's a reversal candle. And same thing, if you see bullish move and you see a couple of indecisive candles backed by some low volume nodes, then that just tells you that the stock's going to pull back, right? You don't want staticness or indecisiveness in the midst of a trend, right? That just tells you that it's going to time for a pullback or a reversal or whatever it is. Okay, I hope that answered your question, Jacob. Yep. All right. So how do we use volume for momentum trading? So the first rule of momentum trading is to identify stocks showing strong momentum and strong price trends. So that is the name of the game. You can have a 10, 20 stock watch list, but it's going to be really, really hard to trade 20 stocks a day, right? Let's be real. So all of us, the three of us, we only trade 1 or 2 or 3 names every single day. That's because we choose our stocks very well, right? So you need to put in the research to find the right stocks to trade. And that's like half of your work done already. If you choose the right stocks with strong momentum and volume, that's like half your work is already done. All you have to do is focus on the execution, enter at the right time, exit at the right time, and your day is done in the first half hour or first 1 hour, right? All it takes is good preparation, good mindset, good position sizing, and then entering an exit strategy. Okay, so that's the first rule. And strength of the price trend can be confirmed using volume. That's why volume is very important. And stocks showing strong momentum always trade with above average volume, that is high relative volume in a given period. Now, stock chart platforms have indicators to provide relative trading volume, that is the average volume, using the volume moving average. So if I go here, right, I want to show you how exactly you can add this to TradingView. So this is a stock chart, Sono, a stock that we actually, I think I signaled this in the chat, right? So you guys can see if you open the indicator menu, right? So there is a button at the top, just click that. That is what you need to do to add an indicator to your TradingView layout. So once you do that, just type in volume, okay? So then you'll get an option called as volume. So select that and you will see all these green histograms added to your chart, right? You'll see all these volume bars added to your chart. So that's the first step. Second step is you need to click the volume indicator and it's going to pop up this customizing option, right? It's going to pop up a menu. And over there, you're going to come in and select volume MA. So volume MA just refers to the volume moving average. So it's essentially going to draw an orange line or whatever line color you customize set it as. It's going to draw a line across your volume bars. And that is just represents the average volume for the time period you specify. So in this case, 50, right? So what's that going to tell me is, what is Sonos I'm in the 5-minute chart. So what's Sonos 50 period moving average? So what's the average price for Sonos, average volume for Sonos over the last 55-minute time periods, right? So since I'm the 5-minute chart, this moving average is going to give me the average volume for the past 55-minute periods, right? So I think the default is 25, but I like to have a little bit more data to my calculation. So my setting is 50. Right? You can leave it at the default if you want, or you can follow me and set it to 50, right? It's up to you. Okay. So this orange line represents the volume moving average for the past 50 time periods. So when you see a stock breaking out like this, right? So this was the breakout level, you guys, into 21.5. First time the stock rejected, second time the stock rejected, the third time it tried, it broke, and this, as you see the candle retained it. So from 21.5, it made a move to 22.3, and it was a solid momentum move. Just 3 straight candles, no pullbacks, no nothing, solid move, right? So you guys can see this was backed by super high volume from the open, 5, 10, 15, 20, 25, right? So 25 minutes volume was back. And look at this candle here. Remember our lesson on momentum. This was a strong rejection candle. And the next candle, actually look at it. It was a red candle. This killed the momentum, right? You guys get it, right? So stock was forming new highs. Distance between the swing highs, you guys can see, is expanding. So these 2 swing highs was small. It was bigger. This was much bigger and even more bigger. But this candle here killed the momentum. Can't you guys see the lesson that we just learned? I'm not making this. I've never discussed this in previous class before, but you guys can see it, right? The momentum was just killed here, right? The momentum was killed. And look at what happened. The next candle, what did I tell you? Wait, if you see a momentum killing candle, wait, don't sell it at the candle low. Wait for the next candle to open, wait for a pop and sell it in this pop. So over here, you guys can see, right? There was a pop here, and that is where you could have sold this candle, right? You could have sold this position. Okay, so you guys can see how when momentum was strong, the stock volume was good. And once the selling happened, you guys have one selling volume here, another selling volume, and then volume just kind of died off. There was just choppiness. So there was no trade after the momentum was killed. A lot of people slowly started taking profits on every pop, and stock started popping around. Momentum was strong for the 5, 10, 15, 20, 25 minutes of the open. Okay, all right. I hope that made sense. All right, so the next thing I want to show you guys is volume divergence. It's an important concept. We learned about this, but I want to show you on a big picture level as well, right? So this is the S&P 500. I think it was the 2018 crash time. So over here, this was the market highs. There was a downtrend here. All of us know how to draw trend lines, right? So you guys can see this is a clear downtrend, lower highs, lower lows. And look at all the selling volume, right? The red volume bars, meaning it represents the volume bar for the red candles here, right? It's much higher than all the green ones, right? So every time prices drop, there was a pop, but no one really bought those pops. There was no conviction in all those pops. That just shows you that the sellers are in total control. And eventually, once we broke this trend, you guys can see the big volume drop, right? Big drop, strong momentum, and the selling climax was here, right? And then once the market hit the low, you guys can see this big bullish engulfing candle, which was again a sentiment shift, right? So far momentum was really strong. This big green candle absolutely changed the sentiment. Now it's bullish. And now you guys can see the lower highs and lower lows are formed and the stock entered a new uptrend. So selling volume was very, very strong near the support level. But as trend progressed and momentum started slowing down, you guys can see that uptrends usually, this is another important lesson for you guys, especially when you're following the indices and longer time frames, right? Momentum usually won't be strong all the time. So usually they're going to see some few indecisive candles along the way. So you guys can see 2 good candles, and then some consolidation, a pullback, and then another 2 green candles, a couple of consolidations, big pullback, good momentum, pullback, right? So that's how things move. But one thing you'll notice here is that as the stock continues to keep going high, there was not even some good green volume bars here. The volume on the green candles continued to deteriorate as prices going higher, and the red candle volume, you guys can see that starting to pick up, right? People are continuing to take profit as stock price goes higher. And over here, these couple of red candles that happened here absolutely actually killed sentiment. A lot of people took profit and they're starting to take profit. So the longer the stock started to grind higher, you know that there was a divergence forming, right? So all the red volume bars are starting to increase. The green bars are starting to decrease. There was a big volume divergence. That's when you know that the smart people are selling, right? They're booking profits, right? And so eventually, like I also mentioned that no trend lasts forever, right? So even this bearish trend, it didn't last forever and it eventually broke, right? And the same thing happened here. This was a very narrow trend. Eventually, this trend was also going to break. The market was double topping here at all-time highs, right? And this trend was about to break. That's exactly what happened. Smart money took profits, and then this trend broke. We had a small downtrend here, and then the bullish volume came. Once this correction happened at 276 on SPY, right? So that's when the bullish volume, you guys can see the bullish volume starting to come here again, and the stock created starting a new uptrend. Okay. during the live market, does the volume form during the candlestick, before the candlesticks? No, it doesn't. So volume just tracks what's happening during that period, right? So you can actually see the volume bar rising in real time. So if you see a lot of candles, candles opening, and you see volume bar immediately rising, that just shows you that, hey, volume is really great on this. So you can just enter it at the open. Like Mike mentioned, the first 5 to 10 minute candles, right, is the highest trading volume. So if you're trading a good stock, right, typically you will see very, very high volume. So that is something that you don't usually have to worry about when you're trading momentum stocks at the open, right? Volume is usually high. So especially if you're trading midday, you want to be paying close attention to volume. What causes relative volume spike? Is it huge order, or is it a bunch of people randomly buying the stock? So volume, that is the next slide actually. That is a good question and you timed it right. So where can we find strong momentum price action? So stocks break out with strong momentum when key price levels are broken. So it can either be a break of key support, or it can either be a break of key resistances that going to cause a lot of volume, meaning a lot of people are going to buy stocks or sell stocks when key levels are broken. Fibonacci retracement levels, so I will cover this in a future lessons, but are areas in a chart somewhere in the middle, right? So those are areas also that will attract strong volume, right? When there is volume, there is chance of momentum, right? And all of us just want momentum, right? And I also mentioned about areas of confluence, right? So if you see multiple key areas intersect in one area in a chart, right? Like it can be trend lines, can be a moving average, it can be a support or resistance level, can be a fib retracement level, or it can be some kind of high volume node that is a key supply and demand area, right? Whatever it is, right? Those are areas where a lot of buyers and sellers are going to be interested in trading the stock. That's where we're going to get good volume. That said, momentum in stocks can also be created by catalyst. What is a catalyst? Some catalyst is something that causes the stock price to move, right? It can be any kind of news, or it can be something that causes buzz, right? So something that causes a lot of buyers and sellers to be interested in the stock. It can be news, it can be a rumor, it can be earnings, it can be analyst upgrades and downgrades. Those guys always like to manipulate stocks, mergers and acquisitions, right? That can also cause big crazy price actions and sector strength. So if you see travel stocks popping on news that vaccines are, it's reducing the number of COVID cases or whatever, then travel stocks are going to pop. If sector strength is good, you can trade that. Market sentiment, if the overall market sentiment is bearish for some reason, yeah, Biden news today, the tax news caused some big selling. A lot of algos were going crazy over it, right? So yeah, those are things that can cause a lot of momentum in our stocks. How do you research your stock selection? Nicholas will go over that later. So we'll go about how we use scanners, how we do our research, how we create a watch list in a future lesson. Okay. All right. So in a nutshell, whatever I'm talking here, therefore, stock selection is important. So you absolutely need to do your research. No matter how good of a trader you are, no matter how good of a technical analyst you are, how good of a chartist you are, you absolutely need to find the right stock to trade, and two, actually apply what you learn and execute, because that's how you learn and that's how you make real money, right? Okay. So just to summarize what we learned today, stock selection is very important. No matter what it is, this is absolutely very important, and always select stocks that are trending, let it be uptrend or downtrend. Doesn't matter what direction you trade. The cool thing about day trading and trading options and trading stocks is you can trade you don't have to be directional. You can be a bi-directional trader. You can learn to trade both sides and make money on the both sides, right? That's the cool thing about options, right? If you're an investor or an equity holder, right, you always want the stock to go up, right? You always have to be a optimist. You can't be, even if there is bad news, you have to be an optimist, right? That kind of sucks, right? So, but if you are a realist and if you are an opportunist, you can make money on both sides, right? And second thing is support or resistance level is broken with above average volume. So this is very, very important. Volume is very important, and if you're entering a trade based on a support or resistance break, make sure that that move is supported by a large volume, right? Next, strong price trends. This is what we learned in the characteristics of strong price action slide. Increase in lengths of trust and decrease in depths of retracements. That is very important. And if you can find some news or event or some catalyst supporting momentum, the better, right? If you see Tesla price target increase, see Elon Musk tweeting something, I don't know, some bullish thing, and that is going to cause the stock to rally. A lot of people are going to buy the hype. It's going to cause them stock to move up. That's a good sign. Good volume expansion in the direction of trend and low volume during pullbacks, right? This is very important. Again, I told you, right? As long as the stocks keep going up and strong buying comes in, good sign. We see pullbacks with low volume, that is a good sign. But if we see pullbacks with large volume, that is a bad sign. Okay. Presence of wide range candles as well. No strong resistances near current price level. I cannot stress the importance of this enough. We'll go over this in future lessons as well. But what this essentially means is, let's say you draw your support and resistance line and you see BA 198 level, right? Let's say that is the resistance level, that is the pre-market high, and you think that you're going to trade the breakout there, which is fine. That may work. Okay. But if you're just focusing on the small picture and you forget what is the bigger picture, that is, let's say you open the chart and you see that 200 is a big level on the 4-hour time frame or 1-hour time frame, and you didn't see that. Okay. So if you enter a trade at 198 and there are a lot of sellers sitting at 200, the stock is going to reject off of 200, right? So if you're just trading for the $2 move, that is fine. But you always need to be aware of what the next level of strong resistance is when you're entering a trade, right? Make sure that whatever support, resistance, or entry level you have, there are no stronger levels above your current entry level. Okay. This is something that you will learn over time as you continue to plan your trades. But I just want to call this out now so that you guys are aware whenever you're drawing a support, resistance, or entry levels, right? Make sure there are no stronger levels right above your current level, right? Because that's going to cause the stock to reject or face some trouble. There's going to be pullbacks, consolidations, and you don't want to be in a position when that happens, right? Same thing applies when you're playing downtrends as well. No strong support level near the current price level. So let's say Tesla 705 is your downside breakout level, right? But let's say 700, there is a strong macro level, like it's a whole number. A lot of people are going to be interested in that. So if you enter a trade at 705, there's a chance that the stock bounces at 700. So you got to be aware of that, right? It's just common sense. So make sure that there are no stronger support levels near the current price. Okay, these are some tips that like we had to learn throughout the years, but this is something you have to realize and take it into consideration in your plotting your levels. Okay, so that's a summary. Now let's go over some examples. Okay, so there are a bunch of beta stock examples: Netflix, Roku, Zoom, Beyond, AMD, Space, and Tesla. So let's go through some real examples. Okay, so this is a Netflix trade that I did last earnings. Right, last earnings, Netflix was a day trading heaven. Right, great price ranges. Look at the price range: 560 to 595 on the day. There's a $35 range. Right, this is a day trading heaven. Right. So basically, I took multiple trades. It's not just one trade, but you guys can see the range is forming, right? So this was the opening range, 577 to 560. There was a little choppiness. The stock bounced here, but then once this range was cleared, it was just a solid uptrend, right? Right? It was a solid uptrend. Okay. So this is how once you know that the sentiment is set and the range is broken, 577 range is broken, the stock was just in an uptrend. And you guys can see 577 to 583. The stock was making big ranges. The candles don't look that great, but this is actually a huge price range. 577 to 580, $6 move, right? Over here, this range is 560 to 570, $11 candle ranges. And over here, 583 to 589, right? That's a $6 range again. Right, you guys can see, right? And I also played the downside. Once I know that the sentiment was killed, you guys can see there are a few put options here as well, right? Played the downside as well. So you can capitalize on the pullback moves, right? You guys can see there is a range here. Once that is broken, you can play the downside as well. Okay, so that's how you need to trade. Once you know that when the stock has great volume, focus on that. Momentum is there. Boom. Okay. The next one here is Roku. All right. So Roku, it made a crazy move that day from 430 to 480. Okay, so I'll go over this particular trade in the lesson number 5, right? So this was a crazy move for Roku on the day. You guys can see this is what momentum and dreams are made of, right? So take a look at this. Stock had some very bullish catalyst, and see the range. Look at all these candlesticks. Look at how this is a 5-minute candlestick, by the way. So you guys can see the swing highs forming, pullback, long the pullback. Right, there was no sentiment breaker in this whole thing. So this was the only sentiment breaker, right? So you guys can see the stock made a high to 259, 260 area. There was a pullback, but then the previous support level, 253, was holding, right? You guys can see, even though the stock was pulling back, bulls were buying the dip, right? And once you guys see, they bought the dip, and once they cleared this high, right, to the previous high, so 259 was the rejection level. Once the stock broke that, momentum came again, right? You guys can see this candlestick, right? So the stock pulled back, the stock retraced, and then eventually it broke out again. And then it made move from 259 to 265, where it got another consolidation. It held. If you longed again above this dip, right, you guys can see that there is a big move here again. And look at this candle here. This was like the climax candle, right? Huge move. Once you see momentum like this, I told you, right? Don't do anything crazy. Don't long here. Wait for a pullback, long that pullback. If you see a big range candle like this, this is my one. If nothing else works for you, just learn this lesson. If you see a wide range candle like this, right? A huge range candle. The next candle, when there is a pullback, long that pullback. No matter how small of a pullback it is, just long that pullback, because the sentiment is so strong that there will at least be a small price move above this particular candle that you can profit off of that. Okay. Where is the entry? Bryson asked me. So this is pretty straightforward. That whatever, let's say you entered above pre-market highs, right? So every time you don't have to ride the trend from start to finish. You can do that, but normal person wouldn't do that. So what you can do is, whenever you see a sign of weakness like this, you can take profit. And what will be your next entry is the break over this highs, right? So in this case, 259 or 260 can be the breakout level, the second entry level, right? So that's how you need to manage it. Okay. Would you buy more shares on the second candle? I mean, Kevin, that is a good question. It depends on what kind of trader you are, right? So if you are going to hold, if you have a large account size, you can build positions and make your profits a lot more bigger, right? You can do that, of course, but your risk increases as well. And at some point, after a big move like this, you want to remove risk off and try to make those onesie twosies. So if you go back here, right, I made one big trade and a second big trade, but all the other trades are small, right? You guys can see that, right? All the other trades are small. I didn't risk too much, and I didn't risk too much of my profits to do those trades. I would enter those trades, and I would have a very tight stop loss. And if things work out, I make a lot of money. If don't, I just take a small loss, right? That is called managing your positions and managing your risk. And we will learn about all of that later. Okay. So the next trade is Zoom. All right. So this is an example I want to show you guys, because this is an example for how news can move a stock. So on this day, right, there was a news saying that the FTC is going to investigate Zoom because of their security flaws, right? So what happened? I was actually watching the stock. I was trying to trade. I was actually watching for a crossover, the moving crossover here, to trade the downside for a scalp. Then this news dropped. Oh my God, from 256, the stock dropped immediately to 240. I made this, since it was a weekly option, it made like a crazy return on this. And I only had 10 contracts. Imagine if I had like 20 or 30 contracts, right? I would have made a crazy return on this, right? So we made a huge return on this. And you guys can see such a big candle. You guys can see a pop, and after that a chop, right? So this is momentum, right? If you see a big momentum candle like this, what did I tell you in the previous slide? If you see a big momentum candle like this, wait for the pullback, short that pullback. In this case, it's the short. It is the same thing applies on the long as well. If you see a wide range candle like this, don't fight against the trend. Don't buy the dip on these candles, because it's going, the next candle, you're going to, it's going to open lower. How much did you put into this trade? I don't know, man. It's 400% return. So you guys do the math. It's not much. I probably put in a 1 or 2K. That's it, right? It's a Thursday contract, so it's very cheap. It's a very cheap contract, right? Anyway, so this is Beyond Meat. This was actually a day trade that we did in the chat together. The news actually dropped after we got in the trade. So you guys can see this level on Beyond Meat. So this was the pre-market low. The stock was chopping around, and then we entered the trade. And right when we entered the trade at 8:43 a.m., right? So this, you guys can see, so this is a 5-minute candle, 5, 10, 15, right? So this is the next candle. This is where we entered the trade. When we entered the trade, news dropped that McDonald's are going to discontinue Beyond Meat's burger, right? Like, I don't know that news. I didn't know it at that time when this news dropped, but I was in the trade, and I was in a very small size. So you guys can see 5 contracts. I was in this trade, and this thing dropped, right? And we took profit. So once I saw something like this happen, oh my God, like I didn't expect this to happen. I didn't see the news. This happened. But then I saw that news afterwards, and that's when I signaled a second entry. So we got a pullback after two big sentiment candles. We got a pullback, right? And we got in the trade right around here when this low broke again. So you guys can see 141. This was a low that was created. We entered the re-entered the trade, but I did it on very small size because IV was super high. You don't want to mess with something with a contract like this. Beyond Meat can easily destroy all your day's profits beyond Roku's and all of that, right? So we entered the trade on smaller size at the second break, and we made a very good move because 149 to 135, we took profits early, but it was a crazy move, right? It's just the two contracts, and I almost made like a 90% return on this, right? And what did I tell you? Remember, I told you that if you see a bunch of indecisive candles around the support level, so we have 1, 2, 3, 4, 4 indecisive candles, right? Low volume. What did I tell you guys? When I told you, we see indecisive candles, low volume, what is going to happen? There's going to be a bounce. What exactly happened? The stock actually reversed and it almost regained all of its losses. This is very important. If you see something like this happen, after the stocks drop like this, don't short here. Don't buy puts here. It will kill you. Trust me, IV is high. If you buy puts here, you will get murdered, right? If the momentum is strong, you see sentiment like this, then short the pullbacks. If you see indecisiveness, stay away, right? Okay, volume died off here. Okay, I hope this makes sense. Next is AMD, right? So again, this is again another momentum trade. Break of pre-market lows was the entry, 56 level. We entered the trade, just had to ride the momentum. Volume wasn't great that day. AMD it's not a great stock, but I think I signaled this for small accounts or something, right? So you guys can see the momentum was dying, and then eventually the 54.5 level was a key level. Once it broke, the stock gained momentum here. Look at what happened after this big candle. There was a small pop, and then eventually selling started happening again, right? So once you see something, a big candle like this, just follow the same direction, you will make money. Even if the trade lasts for a few minutes, you will make a lot of money just doing that. That's how you scalp. That's how you risk it. This is a high probability thing when scalping, in my opinion. Okay. Next, AMD trade that I shouldn't have taken. Okay. Now we were talking about momentum all day. So in this stock chart, there is no momentum. There is no trade. I shouldn't have taken this trade. I did take this trade, and I had to babysit this trade for a long time, right? So what I did was, this was a downtrend. AMD was a selling trend for a couple of days, right? So where I entered this trade was right around here, right? I actually wanted to enter early over here, and I wanted to size up once we broke the pre-market lows. So what happened was it broke here after this big selling sentiment. It broke here, but it immediately retook this position and it started to chop around. And I had to stay in this trade from 10 a.m. till noon before pre-market lows eventually broke, and I added to my position, and then I rode this trend. But do I think that I should have taken this trade? Absolutely not, because it was indecisive. I wasted a lot of time putting money into this trade. I didn't want to take a loss too, but I had to hold on to this for more than I wanted to, missing out on other good trade. I had to babysit this stupid thing a whole day, add to my position here, and then eventually it climaxed, but then it still didn't make a great move. Look at this, 54, 53, 52, like $1.50 move. That's not worth my time, right? So this is not something we should do. And there was no indication of this thing ever selling off, because the indecisiveness, just sideways movement. Remember the first slide that I showed you, right? It was very indecisive. I showed you 3 lines, right? Green, black, and red. This is like that red line. It's not worth my time. Okay. Next, the Space Virgin Galactic. This was a trade that we did for small accounts. You guys can see break of pre-market, $17 level, huge volume coming in, strong momentum. This was the momentum killer. Look at this red candle. What did I tell you? If you see a red candle like this, the stock's failing to create higher highs. That is your cue to exit. Don't exit now. Wait for the next candle pop. You see another candle pop, exit there. Then you guys can see, and the sentiment eventually got killed. Stock started to pull back. All right. Wait for the sentiment killer before exiting a trade. That is actually a good sign, right? Wait for the sentiment killer. At this point, the stock failed to create higher highs. That's when you exit. Okay. And volume also started to die down. Right? Tesla, our great CEO, Elon Musk, right? tweeted Tesla stock price is too high, IMO, in my opinion. He tweeted that, right? Pre-market close 841. This guy tweeted that, being the CEO, right? Or techno king of Tesla, and stock dropped to some 740 to 680, right? Crazy move, intense selling, eventually started stopping around, but he did a crazy thing and gave us an opportunity to make money on the downside. The SEC wasn't happy, the investors weren't happy, but this happened actually. This actually happened, okay, on May 1, 2020. All right. So that's all I have for you guys today. I hope you guys enjoyed today's lesson and learned a lot about momentum, day trading, reading candlesticks, strong and weak momentum price action, and hope that I changed the way you look at stock charts. Obviously, you won't get it from the get-go. You need to put in some time and practice, and practice makes you perfect. But I hope you guys get there and enjoy this lesson. Thank you. Now it's time for questions.
All right. So I'm actually just going to add the linear regression part where I show you guys how to set it up on TradingView to the next lesson. I'll just go over that before I start on Tuesday. Or yeah, if we're bouncing, we're either buying calls or we're long equity.
Before you enter, are you looking at 5-minute or 4-hour? So I check the daily 4-hour and 1-hour charts to block my levels.
You watched the recording on the Thinkific website.
Yeah, Thinkific.
Same.
Does high volume in stocks correlate to high volume in options? Not all the time. How can you tell when a stock is overbought or oversold? The RSI, which I'll be explaining next class. Relative strength index. Any tips for trading open candle? Unraveler will go over that later in the section.
Yep. On momentum, you wait for once you know momentum is confirmed long the pullbacks. That's the strategy. If you can't get in a breakout entry, wait for the pullback. Can we use cup and handle on a short term as well, like a 5-minute chart? You can, but it's not going to be as strong as the cup and handle on the daily chart or the 4-hour chart. Longer time frame price trends are going to be stronger than the short term ones. When you say long, do you mean call? Yes. Webull or TOS for reading the book and the tape. Anything. I mean, it's all the same data. Whatever platform works for you. Can bounce plays break resistance? It can if you guys choose the right stock and you take the bounce and it remounts and breaks past resistance. That's like a dream play. You'll probably make like a great amount of money.
Yeah, reject is for puts, Stanley.
I understand buyers and sellers make up the volume price, but who exactly, what is the question? Who exactly influences volume? The buyers and sellers, supply and demand. So whoever wins that battle, right? They both are going to fight it out. Buyers win, stock goes up. Sellers win, stock goes down.
Ari, how are you drawing the lines? That's through the Zoom app, but I will be showing you how to draw lines on TradingView, and you will see me, Unraveler, and Mike do it often throughout the course of drawing trend lines.
Yep.
On TradingView, all three of us use the same trading platforms and charting platforms.
Yep.
Mike, you still use Thinkorswim sometimes?
Not really.
Okay, yeah, he moved all his equity to Lightspeed,
Yeah.
but me and Unraveler use Thinkorswim, and we all use TradingView to chart. And we will be going over all of our charting, pretty much all of our charting styles on day 8. Or it seems your swings are more TA. The volume needs to be there, but it's more relative. I understand in scalping how important volume is, but in swinging, is it important? In swinging, you're looking for mainly support bounces. And yes, it is important with breakouts when it comes to swinging with volume, but it's only for breakouts. Other than that, so buying off supports and moving averages and stuff like that is just the best way to do it.
Kingsley, we'll be talking about how we all set up our trading view.
Does TOS do anything that TradingView doesn't? I mean, TOS is a broker app, so it has probably more features than TradingView.
TradingView is just for charting, guys.
How much of a role do algos have in market? Not much. Oh, my fault. Yes, they do. Oh, he said algos. Yeah, yes, my fault. The algos do have a big role. We will be going over that. We'll be going over algorithms, not the algos, but like pretty much I'll be going over that, I believe, day like 9 or something like that.
There's no delay on TradingView. It's real time.
Well, you can get a what is that? What do you have to buy to
You have to buy the actual data from NASDAQ, New York Stock Exchange, ARCA, which is $2 a month.
Extra data subscriptions.
Yeah. But the free data is also real time. It's just it looks weird. It comes from bats.
Yeah.
Bryson, Blackbox shows option flow, and it also shows scanner for rising and falling stocks.
How do you find videos on Thinkific? Tag Brett and Warner in the chat. I think they made a tutorial on how to view the videos. I think it's there in the chat. Just ask them and they'll point you in the right direction.
Charting is the same for all trades, right? Options, normal day. Yes. I mean, you will be looking for different setups as far as day trading, swinging, and in different time frames. But I mean, well, to really answer your question, no, because you will be day trading and swinging are two different ball games. They're different time frames, and yeah, different setups. Is a 5K account a good amount to start with? Yes. It's actually the perfect amount. Because, and I'll tell you why. More than likely, after taking AMU, you should be straight. But for somebody who's trying to like learn it on their own, they're probably going to blow half of that 5K. So now they have 2,500 to kind of learn from, and then it starts from there. Well, you guys have a great night. We will see you guys Tuesday. We will be posting the recordings. I hope you guys have a great weekend. Be safe, and God bless all of you.
Have a good night, guys.
Good night, guys.